Okay, so we've been digging through Brookfield's 2025 results, and wow, the numbers are just huge. But, it's not just about the big figures. There's a really fascinating story here. It's all about strategy, some really smart bets, and a huge move that could totally shape their next 10 years. So let's get into it and see how they pulled this off.
I mean, think about it. The global economy is a pretty complicated place right now, right? And for a company of Brookfield's size to post these kinds of results, it's really something. They love to talk about how they own and operate the backbone of the global economy. And well, in 2025, that backbone was rock solid. So the big question is, how'd they do it? Okay, first things first, let's just talk about the sheer scale we're dealing with. $112 billion. That's how much new capital they raised in 2025 alone. I mean, that's just a massive vote of confidence from investors all over the globe. And you know what? They didn't just let that cash pile up. Nope. They hit the ground running and put a staggering $126 billion to work in new investments. We're talking everything from renewable power to critical infrastructure all across their global platform. So what does all that activity mean? Well, it goes straight to the bottom line. They hit record financial results. There's this key number they use called distributable earnings, which is basically the cash profit that's ready to go to shareholders. And that number, it hit $5.4 billion for the year. That's up 11%. We're talking serious, profitable growth here. But here's what's really cool, It's where that profit is coming from. It's not all riding on one horse. It's like a three-legged stool, super stable. You've got their huge asset management arm, their super fast-growing wealth solutions business, and their core operating businesses. That balance, that diversification, that's their secret sauce for stability. And if you want a clear sign that they're confident this will continue, look no further. The board went and bumped up the quarterly dividends by 17%. That's not just a number. That's them putting their money where their mouth is and giving a real return to shareholders, all thanks to these record results. All right, let's dive into the first big piece of this puzzle. We're going to look at their wealth solutions business. This is a part of the company that's been kind of flying under the radar, but it's become this absolute powerhouse, a huge growth engine for the whole operation. So to really get this part of the business, you have to understand this one key idea, insurance float. So what is it? Well, think of it like this. They collect all this money in premiums, right? But they don't have to pay it out in claims right away. So they have this giant pool of cash that they get to invest for themselves in the meantime. And in 2025, just their protection business handed them $8 billion of this float at basically zero cost. It's like free money that acts like rocket fuel for their investments. Okay, so how do you grow that pot of gold? Well, their strategy is global, and it's a three-pronged attack. First, they're going after the massive UK pension market. Second, they're expanding in Asia, where there's huge demand for savings products, especially in Japan. And third, they're pushing hard to expand their partnerships right here in the US. And is it working? Oh yeah, the results speak for themselves. Their insurance assets blew past $140 billion in 2025, and they're on a clear path to smash that $200 billion target by the end of 2026. This thing isn't just growing, it's accelerating. And this is really the key takeaway. Sachin Shah, the CEO of this division, basically says this diversification, it isn't just about looking good on a chart. It gives them a huge advantage. They can be nimble, they can shift capital to wherever it's cheapest to get, and that, at the end of the day, is how they juice their returns. Okay, let's switch gears for a minute. I want to talk about something that goes completely against what you've probably been hearing in the news. We're going to talk about real estate. And not just any real estate, but its surprising comeback. Everyone's talking about the death of the office. So why does Brookfield seem to think everyone's got it wrong? You've seen the headlines, right? Commercial real estate is in trouble. But here's the thing. When you look at the actual numbers for the best buildings, the top-tier stuff, it tells a totally different story. So what's the real deal? Well, the data doesn't lie. Just in 2025, Brookfield signed 17 million square feet of new office leases. And get this, the rent on those new leases was on average 18% higher than the old ones. And in a place like New York City, that jump was a whopping 20%. So much for in trouble. And look, this is no fluke. Their best properties, over 95% full. They've got huge, reliable tenants like Moody's and Visa lining up. There aren't a lot of new buildings going up to compete with them. And when they needed $800 million for a Manhattan deal, lenders were practically fighting to give them the money. The deal was 10 times oversubscribed. It just goes to show you, Quality always wins. And this really gets to the heart of their whole philosophy. The CEO, Bruce Flatt, says it best. They've seen these cycles before. They don't get spooked by short-term headlines. They just focus on one thing: owning and managing great real estate. Over time, he says, that always wins. Okay, so for our last point, we're going to talk about what might just be their biggest move yet. It's a huge plan to change things up, to evolve and radically simplify how the whole company is put together. So, for the last 15 years or so, Brookfield created all these different companies you could invest in, different ways to get a piece of the action. But, markets change. And with index funds becoming so huge, they looked at their complicated setup and realized, hey, this isn't working as well as it used to. Their own word for it was suboptimal. So, what's the plan? They're going to merge the main parent company with that super fast-growing insurance business we talked about. Why? To create one simpler, much more powerful company. So you get a bigger market cap, which the big index funds love, and this is the big one, it lets that insurance business tap into the entire capital base of the whole company. Exactly. The company's president, Nick Goodman, put it really clearly. He said this move will let them supercharge their fastest-growing business with the full financial power of the entire corporation. We're talking about unlocking value on a truly massive scale here. At the end of the day, this whole strategic shift, it's all about one thing. It's about getting even better at what they've been doing for more than 30 years, just relentlessly compounding value for their shareholders. They even have a name for it: the miracle of compounding good results. So let's wrap this up. You've got a record year, you've got a real estate business that's defying the odds, and you've got this major simplification that's making them stronger. The big question now is, what's next? They're already all over huge trends like digitalization and decarbonization. So what's the next big thing that this new, streamlined Brookfield is built to capture? It's going to be really interesting to see.